Welcome back. Hope everybody enjoyed their weekend. Got a lot to talk about in the markets today, even though the price action was relatively flat. But before we dive into anything, remember, hit the like and subscribe button in the corner of the screen if you enjoy the content. And remember, you can also always skip around using the timestamps in the description area beneath each video. Let's dive in. Markets flat again, 30,000. Been hearing a lot of that lately. We did have a Sunday pump, though, for the second Sunday in a row. Usually the markets are pretty flat or they lose a couple points on the weekend, particularly on Sunday. This time, crypto BTC pumped from about 29,200 to 30,500. Second Sunday in a row it's done this. Last Sunday it gave up all the gains. This Sunday it's actually held most of those gains. We're, again, right around 30,000 right now, 30,100. So that's a promising sign. Hopefully this will lead to a little mini bull run this weekend. Went to a cool event here in Los Angeles this past weekend. Edge Wallets was sponsoring an event, a Bitcoin pizza sort of day, a pizza giveaway if you download their wallets. Met the team, a pretty cool team. I met the famous CryptoWendyO. Cool girl, she knows her stuff. So Edge Wallet, what do? So they have a custodial wallet. So obviously the big debate with wallets, like with Robinhood, it's people prefer custodial wallets or non-custodial wallets. For the most part, institutional investors prefer the custodial wallets, meaning the exchange, the wallet provider. They have control over the wallets, so the institutional investors don't have to learn how to download wallets, how to update them, how to store their private keys. They basically just don't have to kind of, learn the technology, whereas retail traders, they like learning the technology. They like downloading the wallets. They like having total control over their wallets, and they don't mind worrying about hacks and stuff like that. So it's the best of both worlds. Edge is catering strictly to the retail traders, the people who want their own custody of their wallets. I think, both kind of wallets I think are always going to have the following, but Edge is strictly on the retail, non-custodial. They have a couple different coins here. What do they have? They have Litecoin. So you can store Litecoin, Bitcoin Cash, Dogecoin, Monero, Ethereum, Phantom. So they got kind of a lot of these old school coins there, the blockchains, the top 10. Cool. So yeah, we're having some discussions there. Everyone's sort of bullish. Everyone's kind of in agreement that the market, it's not going to have huge pumps for quite a while. I think those days might be over, but most people tend to think that the worst days are behind us, that 30,000 is the floor and not so much 20,000, and then hopefully we'll kind of go up from here. I think we're going to trade range bound in the 30 to 40 range for quite a while. It could be 30 to 45, 30 to 50 range, but my guidance instinct's telling me 30 to 40 range for quite a while. Everyone's bullish. It's a different kind of energy. It's more of just a stable, long-term energy, long-term interest in the markets. It's not like a in-the-moment sort of super energetic, high mania kind of energy, which usually leads to the larger price swings. So, not good or bad, but people are bullish. One thing a couple people brought up there, one difference between now and 2018, there are a lot of similarities, but I remember I was talking to this with somebody there. When we dumped from 6,000 to 3,000 in late 2018, in December 2018, the mood was way worse than it is now. I remember I went to a bunch of conferences. Everyone was just walking around like zombies and total funks. That's like right here. People just didn't want to talk to each other. Everyone was just really in a bad mood. A lot of people were just leaving the space completely. They just didn't have any excitement. And now it's not really like that. People wish that there were bigger price increases than there are. People aren't really that happy. It's flat price action, but at least everyone's in a good mood. Everyone likes being a part of the space. They like the other people in the space, the team. So the mood's much more positive, and that's a key difference between now and 2018, even though the price action has seemed kind of similar. Something else people brought up, I thought this was kind of cool. This is the summer of Bitcoin. They're having their second annual 3-month intensive program for college students and people who want to learn about Bitcoins. I didn't even know this existed, but I guess crypto, one thing that's usual, most people in the industry are self-taught. There's not many college courses. The top colleges, the Ivy Leagues, they only have like one college on crypto or one course on crypto or blockchain. There's no major, there's no minor in it. There will be one day. There's not right now. And there aren't really any there's not like a Goldman Sachs sort of summer program that you can take in crypto other than gives you a job there or a job at one of the major companies. These are starting to be developed, but there aren't really, there isn't really that stuff for the most part. So most people in the space are self-taught, which is fine, but I think that'll change over time. So the summer of Bitcoin, this is their second time. It's a 12-week intensive. it caters mostly to technical, so not trading people, not just general enthusiasts, strictly developers, technical people. I believe it's free. The article didn't really mention it. They have a lot of heavy-duty sponsors here, like here it is, Coinbase, Spiral, Unchained Capital, Ledger. So I believe the people putting the class on, they make money just through the sponsors and the people in the class. It is free, but I've listened to how selective it got. So year one, I couldn't find the numbers on it. There were many less people in the class and applied. So this year, year two, I guess year one was successful because for year two, so for 83 spots in this 3-month summer intensive program, 20,300 people applied. So 20,000 people applied, only 83 were selected. It's pretty impressive. Applicants came from 51 countries, and the 83 students selected were from 15 of those 51 countries. It's Argentina, Brazil, Canada, US, India, Greece, Singapore, kind of the countries you'd expect. The highest number of applicants and the highest number of accepted students came from India. It's interesting there. And, saying it's not trading related. It's strictly just programming. It's 12 weeks. You assign a mentor, you take classes, there's tests, there's exams. I just thought this was pretty cool. This could be indicative of, in the future, how the industry is going to go. You go to college, you kind of decide you want to go into crypto. There are going to be these summer intensive programs you could apply to. If you get accepted, then you know that you have a long-term career in crypto. Moving on, so Avalanche revealed that they lost $60 million in the Terra crash. A lot of people were actually relieved with this. People knew that Avalanche had a lot of money in it, and most people feared that the amount they lost was much more, and this really isn't that bad considering Binance lost $1.6 billion. Hashed Wallet Fund in South Korea, they lost $3.5 billion, so only $60 million. That's not bad, so Avalanche supporters were kind of relieved by that. Sticking with Terra, CZ, the cover story of the day, CZ on a mini sort of firing rampage towards the end of last week. Some Binance employees suggested trading against their own users during the Luna and USD drawdown. So during an AMA on Reddit, CZ revealed that he fired a few employees on the spot who suggested that they trade their own funds against what was happening with the Luna and UST, which the article is a little unclear because there wasn't really any insider information going on there that I'm aware of. Everyone kind of knew that Luna and UST were spiraling out of control. The only thing I can think of is they might have been privy to the bailout conversations within the company that CZ was obviously a part of. CZ would have been a part of that. Sam Bankman-Fried would have been a part of that. Brian Armstrong at Coinbase would have been a part of that. The Jump Crypto guy would have been a part of that. So they might have been privy to those conversations. And once they realized the bailout wasn't going to take place, this was the middle of last week and stuff was plummeting, then they maybe suggested shorting the coins. That's what got them fired. Also, they might have had access to an expanded order book. When you're trading on Binance or an exchange, anyone can see the public order book. That's a number of orders that are set to be executed soon, whether it's buy, limit order, sell, whatnot. So it might be that since there were so many trades going on, the order book was expanded. And so Binance employees got to see that there were many more trades and many more sells specifically in the order book. And they could clearly tell that the prices were going to keep plummeting and plummet at a very fast pace. So maybe they suggested short selling, and that's what got him fired. But yeah, CZ, he's the CEO. He seems like a nice guy, but he's the CEO. Remember, he is not afraid to lay down the hammer when he needs to. Moving on. Now, this story here, I thought this should have gotten a little more attention last week. It came out Thursday or Friday. It's a little disconcerting. So, billionaire hedge fund trader Bill Ackman says Terra's algorithm sounds like the crypto version of a pyramid scheme. So, on the surface, not really a big deal. He's just a hedge fund guy. Put out a series of tweets. When I read about the algorithm of Terra, it sounded like a crypto version of a pyramid scheme. Investors are promised 20% returns, backed by a token whose value is driven only by demand from new investors, no underlying fundamental business. So, sort of true. Some parts definitely are true, but that's beyond the point there. So this headline itself wasn't really that big a deal, but when you look at who Bill Ackman is, it kind of is a big deal. So who is he? So he runs a mainstream hedge fund, Pershing Square Capital Management. If you can see this beneath my face, it's $18.5 billion in assets under management. So a huge mainstream hedge fund. They do not have a crypto trading division that I know of. They might, or they might just be looking at one right now, but they're just a mainstream global macro hedge fund. They're specifically known for shorting positions, public shorts. They will short a position in a large company and then go on sort of a PR campaign on television, press releases, so like a loud PR campaign highlighting the negatives of companies. And then the goal is to instill panic amongst investors and a lot of selling, and the price goes down, and then they, close out their short sale and profit from that. So these are, short sellers, obviously in the GameStop fiasco, they do not get the best publicity. And this guy, Bill Ackman, is the face of shit. If there was one hedge fund guy who's the face of short selling in America, it's this guy, Bill Ackman, because his positions have been very loud and vocal. So he's very successful. I got to give him that. He has a net worth of $2.9 billion, obviously $18 billion of management from scratch. That's amazing. So let's look at his hits and misses over the years. So you probably haven't heard of him, but this might sound a little familiar. You might remember about 10 years ago, there was some hedge fund guy accusing Herbalife of being a Ponzi scheme where the sellers they bring in to sell Herbalife products, it's a Ponzi. They're just promised, you can make millions and be a millionaire, but then you have to bring these sellers in underneath you, and you're only going to be successful if they sell and they make a lot of money. It's big. So you might be like, nah, or actually that's sort of familiar. Yeah. Bill Ackman was the public voice he was the guy behind that, basically. So his fund they opened up a $1 billion net short position in Herbalife right before he went on the negative PR campaign. This is in 2012. It was successful for a while, just based upon his successful reputation with the shorting. And the shares plunged 60% after his negative PR campaign, but it ended up being totally incorrect. The Herbalife proved resilient. The brand proved too strong. They made a few changes to their sales program, and the company fully recovered. The share price skyrocketed. It went above what Bill Ackman's company had entered the short position at, and they ended up losing money, losing millions on this short sale, even though they were really in the green for a while. Another one, he had a large position in a pharmaceutical company called Valiant Pharmaceuticals. It was a very public campaign. He'd accused the management of sort of nefarious activity. It proved to be incorrect. His company lost $3 billion on that short sale, but he is a billionaire. He has had some successes. His very public success with right when the coronavirus hit, he gave a very famous CNBC interview. So this is March 18th, like right when Corona hit, and people were really starting to get scared. They didn't know how serious it was going to be. March 18th, 2020, the Corona month. He gives a CNBC interview. He says hell is coming. He says if the economy isn't shut down completely at once, millions of Americans would die. He predicted a bunch of companies would fall to zero. The hotel giant Hilton, they are going to go to zero, $16 billion company because no one's going to travel. Predicted dozens of major U.S. companies acquired by private equity giants like Blackstone and KKR through mass amounts of debt. They're headed for bankruptcy. It's going to threaten tens of thousands of jobs, and hell is coming, was his big statement. And then sure enough, this interview itself had a huge impact on the markets. The market went down 6% that day, and there was a huge drop in both the Dow Jones and the NASDAQ when he was on the air during that interview. So as you can imagine, most people in the country, business-wise or not business-wise, were furious with this. Mike Novogratz that same day, please get Bill Ackman off CNBC before people start jumping off bridges. Yeah, I agree with Mike Novogratz. I remember when Bill Ackman gave the interview, I was furious myself. Other hedge fund managers were furious. They mostly had long positions in the company, so they were not happy that his sort of panic-inducing CNBC interview was causing the market to go down. So that would have been the end of the story right there. This is just a hedge fund guy who has a flair for giving dramatic interviews and making dramatic statements, but the story doesn't end there. So this is a mere 9 days later, March 27th, 2020. Hedge funder Bill Ackman, I made $2.6 billion off coronavirus market crash. So Bill just couldn't keep his mouth shut. He revealed 9 days later it was a poorly timed brag. Ackman said in a letter published on his website, remember CNBC had temporarily yanked his interview privileges. They weren't inviting him back on air after the panic he was calling, so he took to his website instead. wrote in a letter on his website he made $2.6 billion, that is, in less than a month by betting that the outbreak would cause a market crash. He invested $27 million in March 3rd in securities that would soar if investors got worried companies would struggle paying back their debt, and that's exactly what happened. On Monday, Ackman cashed out for an amazing 9,500% return in 3 weeks, less than a month. So, you can kind of see what sort of guy Bill Ackman is here. That entire interview, it was not just him being dramatic. It was him specifically trying to instill panic in people and have a market reaction, which he would profit from, which is exactly what he did. So he got a ton of negative publicity from this. And then 2 years later, it's March of this year, Bill Ackman is done with activist short selling. We'll focus on a quieter long-term approach. I'd probably believe that if hell froze over. I just not really buying that. I think these short sellers, they might sort of go into retirement from short selling. They don't like the negative attention afterwards, even though they profit big time. That I think something sort of stimulates their short selling instincts, like another perfectly timed short sell attack, just like Terra. And I think that sort of stimulates their instincts, and then they kind of dabble in it, maybe get back in the short selling game. So this is a big deal because it does worry me that some of these mainstream macro hedge funds might be looking at this Terra Luna fiasco and basically just growing major hard on, seeing the profit potential, seeing how easy this short was to pull off if you have the capital, which they do, and seeing how much money is to be made. So it's a little worrisome. We gotta keep an eye on, Bill Ackman and the other major short selling macro hedge funds that have the capital to pull something like this off. Shall see. Alrighty, that's it for the day. Hope everyone enjoyed the episode. Don't forget to hit the like and subscribe button in the corner of the screen, and I will be back tomorrow with a new episode. Later.